All right, folks. Well, we've had a lot of information thrown at us over the past couple of weeks between the DNC, the RNC, and today the jobs report was out. So today we want to dedicate part of our show to what we want to call the Financial Fact Check Friday. But first, a look at the numbers. The August jobs report revealed that 96,000 jobs were added to the economy. To put that in perspective, we were actually expecting, or experts were actually expecting, about 130,000 jobs. Meanwhile, unemployment dropped to 8.1% from 8.3%. But don't go singing our praises yet. The most likely reason for that drop is that people have simply stopped looking for jobs. Now, the jobs that were added to the economy were in industries like construction, education, health services, and hospitality. So small gains, but not enough to really change anything other than political discourse, of course. And yet, the stock markets are doing surprisingly well. Why? Well, our own financial guru, Lauren Lister, might be able to shed some light on that. Hi, Lauren.
I'm not a soothsayer, but I will try.
All right, so let's start with this jobs report. I mean, what are we seeing from it as a journalist? It's very hard to cover. One month it's up, the next month it's down. I mean, what are we seeing from these numbers?
Well, I think that one thing that journalists could do a better job of is looking at the big picture instead of obsessing over one jobs report, which is a small snapshot as part of a much, much bigger landscape. And this month is a great example of what so many mainstream publications, I think, where they really get it wrong. Because what is the headline number that appears in so many headlines? Unemployment rate falls to 8.1% from 8.3% the prior month, of course. But you point out, Megan, it's not because more people were getting jobs or fewer people were losing them. It was because 368,000 people were no longer in the labor force. And that drops the labor force participation rate to 63.5%, the lowest it's been since September of 1981. So it's simply that fewer people are looking for jobs because they're depressed, discouraged. Retiring, to be fair, is another reason people drop out of the labor force. But if you're not looking for work, you're not counted as unemployed. You're not counted in the labor force. The labor force is unemployed people, meaning you're looking for work, or employed people. So this is really what's behind the drop in the unemployment rate, which is a far more sour reason than what you maybe be led to believe if you're just looking at the headline of USA Today or the AP or ABC was another one that I saw. So I think that's important. And what you really need to look at is the big picture. If you want to look at the headline rate, if that's what you want to use, the 8.1%, well, guess what? Unemployment has been above 8% for a really long time, the longest it's been since the Great Depression. So it's stuck. And people that are unemployed are long-term unemployed. That number is stuck, and it's a large number. So these are people that are falling through the cracks. They're left out of the economy. Their skills are no longer becoming applicable. It's a very tough situation. There's a huge debate as to whether these are structural unemployment problems, meaning that people don't have the right skills for the jobs available, or if they're cyclical problems, meaning that the economy just needs to get better or get propped up, if you believe that that can or should happen, meaning that something like the Fed could act, which is something I would disagree with, but it's an argument Ben Bernanke makes.
Absolutely. And I mean, I guess it was all the eye of the beholder, the economy, the jobs report. Really, I mean, I know we have Republicans saying this is a horrible thing, you need to get Barack Obama out of office, and the Democrats kind of going on to the realm of maybe not hope and change, but hope and patience. So let's talk about the quantitative easing that we're hearing rumors of. I mean, stock market prices are up right now, which is surprising. It's counterintuitive to the jobs numbers.
But it's not counterintuitive given everything that we know about QE. I mean, one of the things that quantitative easing has arguably been successful at is propping up the stock market. So that's a longer term trend that we've seen over a few rounds of QE that we've had in the past. And if you're someone that believes that news or rumors move markets, we have rumors that the Fed's going to possibly announce another round of stimulus next week, that this jobs report that was weak could have given Ben Bernanke the ammunition to do that. So that's what the stock market may be reacting to. Also, the ECB announced a major bond buying program, an unlimited bond buying program in Europe. So that could be what stock markets are reacting to. So those are both factors that majorly come into play. What you see is stock markets are truly addicted to central bank action, if you ask me, Megan.
Sounds like an interesting point, and I'm going to have to trust you on that. You are, after all, our financial guru. But let's take a look at what Mitt Romney and Paul Ryan had to say really quickly regarding the economy in their RNC speeches last week.
to assure every entrepreneur and every job creator that their investments in America will not vanish, as have those in Greece, we will cut the deficit and put America on track to a balanced budget.
The stimulus was a case of political patronage, corporate welfare, and cronyism at their worst. You, the American people of this country, were cut out of the deal. What did taxpayers get out of the Obama stimulus? More debt. That money wasn't just spent and wasted. It was borrowed, spent, and wasted.
So, I mean, that's the Republican standpoint. Let's take a look really quickly at the Democratic standpoint from last night, and then I'll get your opinions on both.
Sure.
We can choose a future where we export more products and outsource fewer jobs. After a decade that was defined by what we bought and borrowed, we're getting back to basics and doing what America's always done best. We are making things again.
The two men seeking to lead this country over the next 4 years, as I said at the outset, have fundamentally different visions and completely different value set.
So, I mean, Lauren, to me, it kind of seems like this election is moving out of the realm of politics and into the realm of economic referendums. What about you?
Well, to me, it seems like a referendum on economic platitudes and whether or not Americans will accept them. I mean, do you want me to go through some of the remarks that they're giving that I just think smell like BS?
Absolutely.
Okay, fine. Okay. So you hear Mitt Romney and Paul Ryan talking about debt. Okay, Paul Ryan saying the stimulus was an example of cronyism. Paul Ryan voted for TARP, which ended up being a great referendum on cronyism with Wall Street and the big banks. You have Mitt Romney making the comparison to Greece. I hate when politicians just throw out this comparison to, I don't know, scare people. When he's comparing the private sector investment in the U.S. going the way of Greece. In Greece, you have a government that defaulted on public obligations in order to pay creditors in government on their government debt that are at huge levels that can never be repaid. Okay, that puts the economy in a total, it plays into a private sector slowdown, shutdown, I mean, just total disaster. I'm pretty sure the last time I checked, though the U.S. is a disaster, the U.S. could still borrow at record low rates. So that's a pretty disingenuous argument to make in my view. And though Romney and Ryan can talk a big talk on debt and cutting the deficits, how exactly are they going to do that? Are we just supposed to believe them that by raising defense spending and restoring Medicare cuts that they're going to magically be able to do this? I just don't buy that. And since we only have a minute, I'm being told I should be fair and hammer the Democratic side a little bit because Obama's talking about exports. Who is the U.S. going to export to? China's slowing down. There's evidence it may slow down further. Europe, the U.S.'s, I think, largest trading partner, is slow. The ECB just said they believe it could even get worse than they thought this year. Who's going to buy all these goods? And how are these free trade agreements that Obama advocates for and signs going to help? Because it's one thing to believe in free trade, but I think you have to be a little less disingenuous about free trade in the sense that it may not be the best thing if you're talking about American manufacturing jobs, which is, you know, something that they put pressure on. And I don't think we got to Biden, but he was talking about how, I don't know. We didn't get to Biden.
He was all over the place.
Yeah.
He was all over the place, but at least, you know, he said everybody said that his speech was strong. Thank you for helping us sort through all those numbers. There's so many being thrown at us this day. It can be very tricky. Our RT's own Lauren Lister, thank you for helping us out.
Anytime, Megan.